Hey guys, Mike here. So boy, what a big green day in the market. We are ramping up into NVDA earnings. This will be out after that comes out and stuff. But I'm going to show you some data. To me, it was like jaw-dropping data coming out of China about our housing market, about these zombie companies. Oh, good Lord. And then I'm not going to go over too many charts because NVIDIA is going to it'll probably just rock the markets either way, moving it up, moving it down, whatever. But I'll go over a few. Now I'll show you some great data on Tesla as well as Netflix, and then I'll talk to you about some retailers, because on this channel we discuss the whole truth and let you make your decision, not trying to scare people and everything else. Because you might have saw with some of the earnings down, the retailers, they were dropping like tech stocks, as I was telling the members this morning, 20-30% one day. Now if you look at the news coming out of China, oh boy. I mean, I don't know how they're getting out of this one, but look at this construction starts. They've fallen 56% since 2021. And then look over there, that's the real estate under construction, minus 17%. So as you can see, this goes back into the early 90s. Never seen anything like that before. I guess this is what happens when you build what they call them, ghost cities and stuff like that. You know what's crazy? I saw pictures last night. They even built a city to mimic France. They got the Eiffel Tower and everything. I hope those pictures are real, but I saw it last night. Now, this is what is really stunning, and pay close attention to this 40-second clip right here.
Their bank assets, how many loans they have? 54 trillion at the end of 2022. They have a smaller economy than the United States, and bank loans in this country are 23 trillion, roughly half. When you have that much debt, the question that China faces is, how are they going to handle it? Are they going to have a full-on debt crisis, or are they going to have a big balance sheet recession like Japan had, which means you wait for years and years for people to pay off as they extend and pretend, and when people are paying off old loans that aren't that good or are getting restructured, they don't have money to do other things, like buy a car or do whatever they would do with that money. So
I mean, they're in a heap of trouble.
They're in a heap of economic trouble.
Woo! 54 trillion with a T. And you know how much we love our debt in this country, and we got half of that? I mean, that is staggering. That is, when I saw that, I'm like, oh boy, I did not know it was that bad. I knew it was bad, but the fact we are built on debt and they got twice as much with their banks, oh boy. Yeah, I see why everybody's worried about that shadow company over there, the shadow banking part of it. I mean, that's just staggering. Again, I don't know how they get out of that. I really don't, because I've already showed you the population issue they have, the unemployment with the younger people who they won't even allow that data out anymore. And so, yeah, that's, my goodness. I don't know, let me know what your guess is on how they're going to get out of that. But understand, it is extremely important, as I went down the rabbit hole today, that they get out of it, because, again, it's the second largest economy. I'm not rooting against them, even though I don't like a communist party or anything. But their people, are just normal, everyday working people, right? Trying to make a better life for themselves. But also understand, if they had an economic collapse, buddy, it's going to be felt around the globe. I mean, think about Australia. 1/3 of their exports goes to China. It's their largest trading partner. Do you know how much money, and hundreds of billions of dollars, that companies in this country have invested in China right now? Do you know how much money China has invested around the world? Which, if they go down economically, they're not going to be doing those investments anymore. So people will feel it on a global scale. It's no different than what happened to 2008 here. People felt it on a global scale. It spread. Okay, when you have the number one, number two economies getting whatever, a cold, everybody else gets the flu or whatever, I'm telling you. And so they better get it fixed. So I'm rooting on for it to get fixed, for the world, that is, okay? So keep that in mind. Now here we got the opposite problem when it comes to our real estate market. I just updated you on this last week, right? And rates went up again to 7.31. We were back in 2007 rates. Now we're back to 2000 type levels. And look at the applications. I mean, they just keep dropping. So we have the opposite problem here. And so, again, because rates are high, prices are high, I mean, it's hard to buy. People are still buying. I mean, it's like 700,000 or whatever went out on the last report. So people are still buying because they're being told buy now and you can refinance when the rates drop. Okay, so keep that in mind. Now, looking at these zombie companies, again, I've updated you on this every time I get information about it, which ain't very often, but this will continue to rise. This is where you'll see the bankruptcies really pile up if rates stay high for a long time. But the U.S. rising share of companies with debt servicing costs that are higher than profits And you can see this just didn't start in 2020. It started in 2002. It just really ramped up through 2010 and 2021 because money was free, right? And now money's not free. And so you can see around 19% right there of these companies that have this problem. And so these are where you'll see a lot of bankruptcies coming. You're already seeing them, pile up. I keep showing you that every time I get the data. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing, which of course is not good. And I don't root for it because guess what? People lose jobs when that happens. So that sucks. But it's just a new era now, right? Money, when you got to refinance, take out debt, it's way, way higher, okay? And we all know, we've seen it. I've shown it to you. I'm sure you ran across these companies that are unprofitable. Their stocks are probably up 5,000% or something and everything, but they ain't making no money. And so when they have to refi debt, it's going to be a huge problem for them. Now, today, understand, I'll show you, I'm going to show you exactly what caused this rally. High beta and anything to do with tech and crypto for that matter, absolutely is going up. By the way, look for stocks that are red on days like today, which would be Roblox right there. A lot of selling pressure on that stock. You can't buy a bid right now, but you keep going down. It didn't matter what the sector was. Didn't matter if it was China. Didn't matter, right? I mean, anything, high beta, tech, any of that stuff was going up. Nickel deserves to be in the toilet. What a garbage company that is. And then when you keep coming down here, you can see fintech, again, didn't matter. And look at the semiconductor stocks. Whew, I mean, NVIDIA just dragging them up today, right? Netflix we'll talk about actually because something happened to them. That's what made them charge up almost 5% on the day. And you can see this is what happened right here. I told you, I think I did a members video on this yesterday. I told them if the 10-year treasury shoots down, which had a big red candle today down 3%, you will see high beta stuff go up. And that's exactly what happened. And make sure you pay attention to that trend line because if this keeps coming down, it's a double top. But make sure you pay attention to the ascending trend line. That's what you want to see. If it breaks that, then you're going to see high beta stuff go through the roof. And again, this is like a stock. When it gets overbought on the RSI, it always rolls over, right? And so that's what's been happening. So I've been telling you to watch out for. Again, what else happened? The dollar is just stuck. It was slightly red on the day, stuck right here. It kind of looks like it wants to roll over right here. And if it does roll over, even short term, I'm talking about even for a week or two, and the 10-year yield goes with it, that is jet fuel for anything to do with tech. Okay, so just keep that in mind right there because that is big. Okay, not saying it's going to happen. It could break out, finally break out, do a retest, and keep going. But that stuff is just jet fuel for it. And the one thing we got to keep aware of, and I'll keep you updated on this, is the breadth, right? And you can see what I'm talking about. Obviously, you can see the NASDAQ price skyrocketing. You can see the NASDAQ cumulative advances and declines as far as like setting new highs, new lows and stuff. I mean, not doing much, right? But you see the NASDAQ is up a mile because of the Magnificent Seven, as usual, right? NVIDIA and stuff like that, being the hard chargers they are. But this has to start improving for a longer term move up. Will this happen? I don't know. But again, because the tech stocks have ignored the 10-year yield and stuff as it's been charging up because they're doing this pause rally and everything else, that's what's caused this. And we'll see if, because you can see they go hand in hand, right? So we'll see if gravity takes effect eventually and something happens, or you just start seeing, instead of NASDAQ coming down a while, you see the breadth increase quite a bit. Now you see the Qs, huge move up today, just absolutely enormous move up. And so again, I was able to stay out of this downward channel right here, break above a key resistance level right there. But what stopped it was the 50 moving average. It's like a brick wall when it hit it. That's usually the case. If you see something start selling off, pull it, your moving averages on your daily, and you'll see that's what happened today. Now, obviously this will move if NVIDIA reports great earnings and it moves up for tomorrow. Now Tesla, again, pretty big day. It started off red, and I'll show you why it started off red. But as you can see on this, you got your 8 and 21 curling up. Still another green day right there for it. It needs to get above this high right here. So set a new higher high, come back down, set a new higher low, obviously. That will be a nice little trend change to see. The key, though, I think if I zoom out here, you can see if it can get above this trend line, which would basically be between like 248 and 252, somewhere in that area, depending on when it hits it, then that would be super bullish for Tesla. and start setting those new higher highs, new higher lows, obviously we'll have a trend change there. And plus the 8 and 21 will have crossed by then, which is usually bullish for Tesla. You can see right here that volume node lines up right around 250-ish right there, which would be where it needs to break when it comes across that line. So I think you'll see fuel absolutely injected if that happens right there. And what's actually got it red in pre-market was they announced they're going to lower the production targets in Germany. And you can see right here, I mean, they lowered the production target of this German plant to 4,350 a week in July and August after hitting 5,000 a week in March, and plans to reduce it further according to some documents they got a hold of it and everything. So just, pay attention to that right there. Take it for what you will. But the other thing is, long term, if you're looking at this kind of shows you the head start Tesla's got on everybody, right? I mean, all EVs in the first half of the year sold, 63.5% were Tesla. All these other auto companies, 36.5%. And to show you what I'm talking about, I say other auto companies. There's another way to look at this. Look at them: Polestar, Volvo, Nissan, Audi, Kia, Rivian, Volkswagen, Mercedes, BMW, Hyundai, Ford, Chevrolet. So all those combined didn't even come close to Tesla, about half of what they sold. So, they just have such a huge runway and all the infrastructure they've built out over these years. And when you look at this is something I found today too. This looks at the first 7 quarters of Lucid, Rivian, and Tesla, how many they produce and stuff. And it's kind of funny when I look at it and we scroll down here, you can see the numbers there too. They're like Lucid and Rivian are producing more than Tesla over those first 7 quarters, and give it time, they're going to ramp up and stuff. Well, the problem with that is, and I'll try to find this video for you, is remember when Tesla started ramping up in 2011, how many Teslas did you see on the road? Did the EV sector even exist? No, not really. It existed in China, especially not really here at all, right? And so they had to go build the infrastructure. But I'll put a video at the end I did 2 years ago showing you the magic sauce of actually what happened to allow Tesla, especially in the United States, really is where I'm focusing on that, to actually expand the brand here and grow it like they did, because they tried for many years with no success. And I'll show you in that video exactly why they were able to blow it up like they did. But they just, at this point in time, the infrastructure they have in place, the technology, all that stuff, they're just so far ahead of somebody. And literally, I mean, they kind of, in the United States, invented the sector, right? And so, because BYD over in China I'm pretty sure they were doing it before Tesla got there and stuff. And that's another big company and successful company. But in fact, I know they were, because Warren Buffett was buying into them back in the day. So, but I'll put that video at the end if you want to know about that stuff. So, of course, I expect new EV makers to be pumping out more than Tesla did back in 2011, because the runway is basically set for you, right? The business model is set for you. The economic environment, the way people accept EVs now is set for you. So, anyway, watch that video and let me know what you think about it. Now, Netflix, huge day, up almost 5% on the day right here. Ran into that volume node, obviously, which is resistance. That's what stopped it, but the only thing that stopped it. The 8 and 21 are trying to curl up and cross right there. I have to mark that gap off because it actually did fill that gap now. And when you look, look, if it can break above that volume node right there, that resistance, obviously you got a gap within a gap right there. If it can't and it drops, you can see, there's not a whole lot of support there for it. But if it does, then the sky's going to be the limit. And what pumped this today was this right here. Oppenheimer comes out and gives it a $515 price target. Now, did they pull that out of their butt, or did some technician tell them to pick it? Some technician told them to pick it. And look at this right here. Here's your resistance. Here's the top of that gap. The top of that gap right there, where all the resistance is right around 515. That's why they picked that number, because when it gets up there, it is going to hit a lot of resistance, okay? But look what happens when it gets over the resistance I just talked to you about. Huge volume gap. Boom. So it has a free runway to that number if it can get going and the market actually starts to pick up again. So keep that in mind. Now, when it comes to earnings, obviously tomorrow we're going to have a lot more retailers, which I'll talk about in a minute. You have Dollar Tree, Burlington, you have Petco come out. After that, you'll have Marvel, which is another semiconductor, Affirm, Ulta, which makes makeup. Intuit's going to come out as well. You have Gap, another retailer, Nordstrom come out. And then when you look at economic data, you're going to have your job data come out tomorrow. You're going to have Chicago Fed national activity come out tomorrow, which people will probably look at. But the job data is really all people are going to care about tomorrow. You'll have Kansas Fed manufacturing data. And understand, I've never put this much time on a morning news briefing to retail, but I want you to get the full story here when we're talking about this, because, it was horrendous with the reports we got this morning. Stocks were dropping 25, 30%. We're talking about retailers. And I put in here, these stocks are dropping like freaking tech stocks that reported bad earnings, right? But understand, it's obvious Amazon and Walmart, who make up 45% of e-commerce, and God knows how much Walmart makes up of in-store sales, are crushing their competition. And also it's obvious that we, the consumer, are looking for discounts on high-quality merchandise, and we like e-commerce. And if you don't have that, we probably ain't shopping with you, because Kohl's, disastrous. Profits were down 53%. Foot Locker, disastrous. The stock dropped 30% pre-market. Nike ended up getting knocked down because of bad news in China. Dick's Sporting Goods, which carries Nike's, also was bad. Their profit dropped 23%. Macy's sales tanked 36% from the prior year, which was a disaster. But the truth is, and a lot of these stores want to blame it on theft and everything, which, who knows if that's true. Then you have Peloton shares dropped 26%, well-deserved. But the good news is you have Urban Outfitters that reported really good earnings. And then you go on, you saw what happened last week, right? Ross Stores, Walmart, TJX, which owns TJ Maxx and Marshalls, raised their full-year outlooks, right? And so that's a good thing. And they saw good sales come in the second quarter. And so these retailers, which live in the off-price and discount sector, benefited from a value-focused trend pushing consumers to save where they can during the uncertain economic environment. And so it's really about who's running the stores correctly, who's offering the discounts and can offer the discounts, and who does e-commerce. And I'll be honest with you, I don't know if you're guilty of this, but this has happened to me multiple times. Just the other day, I was pulling out of my garage to go buy something, and I hate shopping, by the way. Hate going into stores nowadays. And I said, wait a minute. What am I doing? Why don't I just order off Amazon? So I literally rolled back up in the garage, got on the computer, ordered it. It was here at 10 o'clock the next morning. I was good to go, And so I don't know if you've done that before, but it's just the way it is. And a lot of these companies are way behind the times on that. Didn't make the switch in time, and so now they're losing a lot of customers. And supposedly people are walking out with baseball bats out of Dick's Sporting Goods and Macy's. Maybe they're doing that. I don't know. I don't go shop there anyway, but so yeah, that's where it is in the retail. It's bad on one side, but again, we're still shopping. We like e-commerce. We're still running up the credit cards, okay? And so it's not as dire as what they're trying to really make it out to be. It's just a lot of these companies, especially they're in malls, and malls are just dying like crazy anyway. They're not doing any good. So that's really not where you want to be. So anyway, so we'll see what NVDA reports. I'll put a lot more charts out tomorrow. We'll talk a lot more about that because I think that's what's going to steer us in one direction or the other. I'll be shocked if Jackson Hole is anything but a nothing burger, because we kind of know what the man's going to say pretty much. And so that's where we're at on that. So just let me know your predictions, where you think the market's going, and we'll go from there. All right. So please hit the like and subscribe button if you got anything out of it. Really appreciate all your support, and I'll see you tomorrow.